Warren Edward Buffett, the man who would become known as the Oracle of Omaha, was born on August 30th, 1930 in the heartland of America, Omaha, Nebraska. This Midwestern city, known for its industrious spirit and close-knit community, would play a significant role in shaping the young Buffett's character and values. Born into a family of modest means, his father, Howard Buffett, was a stockbroker and later a congressman. Howard's career in finance and politics exposed Warren to the intricacies of the financial world and the importance of public service from an early age. Howard's dedication to his work and his ethical approach to business left a lasting impression on Warren. His mother, Layla Stahl Buffett, was a homemaker who instilled in him the values of hard work, discipline, and integrity. Layla's nurturing presence and unwavering support provided a stable foundation for Warren's upbringing. She encouraged his intellectual curiosity and fostered a love for learning that would become a hallmark of his life. These values, coupled with his innate curiosity and sharp intellect, would form the bedrock of his extraordinary journey. From a young age, Warren exhibited a keen interest in reading and learning, often immersing himself in books that were far beyond his years. His inquisitive nature and analytical mind set him apart from his peers. Even as a young boy, Buffett displayed an uncommon fascination with numbers and the world of business. He would spend hours poring over financial reports and business books, absorbing knowledge like a sponge. His early ventures, such as selling chewing gum and delivering newspapers, showcased his entrepreneurial spirit and determination. Growing up in the midst of the Great Depression, he witnessed firsthand the devastating impact of economic hardship on families and businesses. This period of economic turmoil left a profound impact on Warren, teaching him the value of financial prudence and the importance of making sound investment decisions. The lessons he learned during these formative years would guide his future endeavors. This experience left an indelible mark on him, shaping his worldview and fostering a deep appreciation for financial security and independence. Warren's early encounters with economic adversity instilled in him a desire to understand the mechanisms of the financial world and to seek out opportunities for growth and stability. These foundational experiences would ultimately pave the way for his remarkable career as one of the most successful investors in history. The stock market crash of 1929, a pivotal event in American history, cast a long shadow over Buffett's early childhood. While he was too young to fully comprehend the complexities of the financial meltdown, its impact on his family was profound. His father's brokerage business suffered, and the family faced financial strain. This early exposure to the volatility of the stock market and the fragility of financial systems sparked a lifelong interest in understanding the dynamics of finance and investment. It also instilled in him a cautious and disciplined approach to money management, principles that would later become hallmarks of his investment philosophy. Buffett's entrepreneurial spirit manifested early on. Even as a child, he exhibited a keen interest in making money and understanding the mechanics of business. He was fascinated by the world of business and finance, devouring books and magazines on the subject at an age when most children were preoccupied with toys and games. His curiosity was insatiable, and he spent countless hours at the local library, immersing himself in the wisdom of financial experts and successful entrepreneurs. At the tender age of 7, he borrowed a book called 1,000 Ways to Make $1,000 from the local library, embarking on his first formal exploration of business and wealth creation. This book became a cornerstone in his early education, providing him with practical advice and a roadmap to financial success. This book, with its practical advice and inspiring stories of self-made entrepreneurs, ignited a spark in young Buffett's mind. He was particularly drawn to the stories of individuals who started with nothing and built their fortunes through ingenuity and perseverance. He was captivated by the idea that ordinary people could achieve financial success through hard work, creativity, and a bit of luck. The notion that he too could carve out his own path to prosperity was both thrilling and empowering. He began to see the world through the lens of opportunity, constantly searching for ways to turn his ideas into profitable ventures. Whether it was setting up a lemonade stand, selling chewing gum, or delivering newspapers, young Buffett was always on the lookout for his next business endeavor. His early experiences laid the foundation for a lifetime of entrepreneurial ventures and financial acumen, shaping the future billionaire's approach to business and investment. These small ventures were more than just childhood pastimes. They were practical lessons in economics, risk management, and the value of hard work. Each new project taught him something valuable about the world of commerce and the importance of seizing opportunities when they arose. As he grew older, his passion for business only intensified. The seeds of curiosity planted in his youth blossomed into a lifelong pursuit of knowledge and success. Warren Buffett's journey from a curious young boy to one of the world's most renowned investors is a testament to the power of early inspiration and relentless determination. At the age of 11, Buffett took his first plunge into the world of investing, purchasing 3 shares of Citi's Service preferred stock for himself and 3 for his sister Doris. This seemingly small investment marked the beginning of his lifelong journey as an investor. It was a tangible manifestation of his growing fascination with the stock market and his belief in the power of compounding. While the initial excitement of the purchase was soon tempered by a dip in the stock price, Buffett held on, eventually selling at a modest profit. This early experience taught him valuable lessons about patience, the importance of long-term thinking, and the emotional discipline required for successful investing. Section 5. The paper route, delivering more than just news. Like many ambitious youngsters, Buffett was not content with simply learning about business from afar. He was eager to put his knowledge into practice and experience the challenges and rewards of entrepreneurship firsthand. At the age of 14, he embarked on his first real business venture, delivering copies of the Washington Post. This was no ordinary paper route. Buffett approached his delivery job with the zeal of a seasoned entrepreneur, meticulously planning his route, optimizing his delivery time, and even leveraging his growing knowledge of finance to invest his earnings. He understood that success, even in a seemingly mundane endeavor, was the result of hard work, dedication, and a keen eye for efficiency. Section 6. Taxing Times, a teenager's tryst with the IRS. By the age of 15, Buffett's entrepreneurial spirit had blossomed into a full-fledged passion. He wasn't just dabbling in small ventures. He was deeply invested in understanding the mechanics of business and finance. His early experiences selling chewing gum, Coca-Cola, and weekly magazines had laid a solid foundation for his burgeoning business acumen. He was no longer content with simply earning money. He was driven by a desire to build and grow his own businesses. This drive saw him exploring various avenues, from pinball machine operations to delivering newspapers. Each venture was a learning experience, teaching him valuable lessons about profit margins, customer service, and market demand. This ambition led him to file his first income tax return, a testament to his burgeoning business acumen and unwavering work ethic. At an age when most teenagers were preoccupied with school and social activities, Buffett was meticulously documenting his earnings and expenses, ensuring that every penny was accounted for. Filing his own tax return at such a young age was more than just a bureaucratic formality for Buffett. It was a symbolic step towards establishing himself as a serious entrepreneur. It was a clear indication that he was not just playing at business. He was committed to understanding and adhering to the legal and financial responsibilities that came with it. It demonstrated his willingness to navigate the complexities of the business world and his commitment to financial responsibility, qualities that would serve him well throughout his career. This early experience with the IRS was a crucial step in his journey, reinforcing the importance of diligence, accuracy, and integrity in all his business dealings. It was a formative experience that shaped his approach to business and finance, laying the groundwork for the legendary investor he would become. Section 7. Pinball Wizard, Striking Gold in the Arcade. One of Buffett's most notable early ventures was his foray into the world of pinball machines. Recognizing an opportunity to capitalize on the post-war popularity of these amusement machines, he convinced a friend to partner with him, purchasing a used pinball machine for $25. They installed it in a local barbershop, and the Buffett & Son pinball empire was born. The venture proved to be a resounding success. The pinball machine was an instant hit, generating a steady stream of quarters and providing Buffett with valuable lessons in cash flow, customer acquisition, and reinvestment. He used the profits to purchase more machines, strategically placing them in businesses around Omaha and expanding his pinball empire. Section 8. The Making of a Visionary Early Lessons, Lasting Impact. Warren Buffett's early life was a crucible in which his extraordinary talents and unwavering work ethic were forged. From his childhood fascination with numbers and business to his early entrepreneurial ventures, each experience contributed to shaping his unique investment philosophy and approach to wealth creation. His early exposure to the stock market, coupled with his entrepreneurial drive, instilled in him a deep understanding of business fundamentals, risk management, and the power of long-term investing. These formative experiences laid the groundwork for his remarkable success, transforming a curious boy from Omaha into one of the most influential investors of all time. Warren Buffett, a name synonymous with investment success, displayed an early aptitude for business. Even as a child, he was fascinated by numbers and the stock market, often spending hours reading financial reports and business news. As a young boy, he was already buying and selling Coca-Cola bottles for profit, showcasing his entrepreneurial spirit. This early venture into business was just the beginning of his journey, as he constantly sought new ways to make money and understand the mechanics of business. When it came time for college, Buffett initially enrolled at the University of Pennsylvania's Wharton School of Business. This decision was influenced by Wharton's prestigious reputation and its renowned finance program, which he believed would provide him with a solid foundation for his future career. He chose Wharton for its prestigious reputation in finance and its potential to equip him with the necessary tools for success. However, despite the school's esteemed status, Buffett soon realized that the environment was not conducive to his learning style. However, Buffett's time at Wharton was short-lived. He found himself disengaged and unmotivated, feeling that the curriculum was too theoretical and lacked practical application. He found the curriculum uninspiring and felt that the professors were more focused on theory than practical application. This disconnect between his expectations and the reality of the coursework led to his growing frustration. Disillusioned with the Ivy League experience, he decided to return to his roots in Omaha, Nebraska. This decision marked a significant turning point in his life, as he sought a more practical and hands-on approach to his education. Back home, Buffett enrolled at the University of Nebraska, where he thrived in a more familiar environment. Here, he found the balance between theoretical knowledge and practical application, allowing him to excel and further develop his business acumen. Buffett's decision to leave the University of Pennsylvania was a pivotal moment in his life. It was a bold move that would shape his future in ways he couldn't have imagined at the time. It demonstrated his independent thinking and his willingness to forge his own path, even if it meant going against the grain and leaving behind the prestigious Ivy League environment. This decision to deviate from the conventional route to success was not easy, but it was a testament to his determination and vision for his future. At the University of Nebraska, Buffett found a more comfortable academic setting that suited his needs better. The environment was less competitive and more nurturing, allowing him to thrive. He enjoyed the smaller class sizes and the opportunity to interact more closely with his professors. This close interaction provided him with valuable insights and personalized guidance that he wouldn't have received at a larger institution. He majored in business administration, soaking up knowledge that he knew would be directly applicable to his entrepreneurial pursuits. The curriculum was practical and hands-on, which was exactly what he was looking for. During his time at Nebraska, Buffett also began to develop his investment philosophy. He spent countless hours reading extensively about the stock market and studying the strategies of successful investors, laying the groundwork for his future success. He was particularly drawn to the works of Benjamin Graham, the father of value investing. Graham's principles resonated with Buffett and would later become the foundation of his own investment strategy, guiding him throughout his illustrious career. The University of Nebraska played a significant role in shaping Buffett's future. It was there that he honed his business acumen and developed his passion for investing. Buffett graduated from the University of Nebraska in just 3 years, a testament to his drive and focus. After graduating, Buffett was determined to further his education in the field of finance. He set his sights on Harvard Business School, believing that a degree from the prestigious institution would open doors to Wall Street's elite. However, fate had other plans for the budding investor. Despite his stellar academic record and evident passion for finance, Buffett's application to Harvard Business School was rejected. This setback could have easily deterred a less determined individual, but Buffett remained undeterred. He refused to let this rejection derail his ambitions. Instead of dwelling on the disappointment, Buffett explored alternative options. He discovered that his idol, Benjamin Graham, was a professor at Columbia Business School. Eager to learn from the master himself, Buffett applied to Columbia and was accepted. Section 5. Embracing Columbia. Columbia Business School proved to be the ideal environment for Buffett to flourish. Under Graham's tutelage, he was exposed to the principles of value investing, a philosophy that would become the cornerstone of his investment strategy. Graham emphasized the importance of investing in undervalued companies, those whose intrinsic worth was not reflected in their stock price. Buffett absorbed Graham's teachings like a sponge, excelling in his classes and earning the respect of his professors and peers. He graduated from Columbia with a Master of Science in Economics in 1951, equipped with the knowledge and confidence to make his mark in the investment world. Section 6. The Benjamin Graham Influence. Benjamin Graham's influence on Warren Buffett's investment philosophy cannot be overstated. Graham's book, The Intelligent Investor, became Buffett's investment Bible, shaping his approach to analyzing companies and identifying undervalued assets. Graham's value investing principles resonated deeply with Buffett. He embraced the idea of viewing stocks as fractional ownership in businesses, rather than mere pieces of paper to be traded. Graham taught him to look beyond short-term market fluctuations and focus on a company's long-term earning potential. Buffett learned to meticulously analyze financial statements, seeking out companies with strong fundamentals and a margin of safety, meaning their stock price was significantly lower than their intrinsic value. Section 7. Value Investing Principles. Value investing, as espoused by Graham, provided Buffett with a framework for navigating the complexities of the stock market. It instilled in him a disciplined and patient approach, one that shunned speculation and emotional decision-making. Graham emphasized the importance of margin of safety, buying stocks only when their price was significantly below his assessment of their intrinsic value. This provided a cushion against potential errors in judgment and market downturns. Buffett adopted Graham's principles wholeheartedly, using them as the foundation upon which he would build his own investment empire. Section 8. The Philip Fisher Approach. While at Columbia, Buffett also sought out Philip Fisher, another legendary investor known for his growth investing philosophy. Fisher's book, Common Stocks and Uncommon Profits, introduced Buffett to the idea of investing in companies with strong growth potential, even if their stock price appeared high relative to their earnings. Fisher advocated for a qualitative approach to investing, emphasizing the importance of understanding a company's management, competitive advantages, and long-term prospects. He believed that investing in companies with a sustainable competitive advantage, often referred to as a moat, could lead to exceptional returns over the long term. Section 9. Blending Two Philosophies. Buffett was intrigued by Fisher's ideas and recognized the value in considering both quantitative and qualitative factors when making investment decisions. He saw that numbers alone couldn't capture the full picture of a company's potential. He admired Fisher's focus on identifying companies with exceptional growth potential, those that could expand their market share and innovate within their industries, and his emphasis on the importance of a strong management team. Fisher believed that the people running the company were just as crucial as the financial metrics. Over time, Buffett skillfully blended Graham's value investing principles with Fisher's growth investing insights, creating a hybrid approach that would become his trademark. This approach wasn't just about finding cheap stocks, it was about finding great companies at reasonable prices. He continued to seek out undervalued companies with strong fundamentals, those with solid balance sheets and consistent earnings. But he also began to consider factors such as management quality, brand recognition, and competitive advantage. These qualitative aspects helped him understand the long-term potential of a business. This balanced approach allowed Buffett to identify exceptional businesses that could compound in value over the long term. By integrating both philosophies, he was able to achieve a more comprehensive understanding of what makes a company truly valuable, ensuring sustained success in his investments. Section 10. Buffett Partnership Limited. In 1956, armed with a wealth of knowledge and unwavering confidence in his investment philosophy, Buffett returned to Omaha and founded Buffett Partnership Limited at the age of 26. He pooled money from family and friends, promising them that he would outperform the market over the long term. Buffett's investment partnership was structured differently than most. He charged no management fees, but instead took a 25% cut of any profits, exceeding a 6% hurdle rate. This aligned his interests with those of his investors, as he would only profit if he generated returns that outpaced the market. Section 11. Early Success and Growth. From the outset, Buffett Partnership Limited achieved remarkable success. Buffett's disciplined investment approach, rooted in the principles of value and growth investing, consistently generated impressive returns for his partners. He sought out undervalued companies with strong fundamentals, long-term growth potential, and capable management teams. Word of Buffett's exceptional investment acumen spread, attracting a growing number of investors eager to benefit from his wisdom and market insights. Buffett Partnership Limited became a testament to the power of his investment philosophy and set the stage for his future success in the world of finance. Warren Buffett, often called the Oracle of Omaha, is one of the most successful investors of all time. He is the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company. Buffett's investment philosophy, characterized by patience, value investing, and a long-term perspective, has earned him immense wealth and global admiration. Buffett's journey to becoming a financial titan is an inspiring tale of discipline, strategic thinking, and an unwavering commitment to his principles. His story resonates with both seasoned investors and those just beginning to explore the world of finance. Buffett's influence extends far beyond Wall Street. His philanthropic endeavors, particularly his pledge to give away the majority of his wealth, have set a new standard for generosity among the world's wealthiest individuals. His life and work offer valuable lessons not only in finance, but also in ethics, leadership, and the pursuit of a meaningful life. Berkshire Hathaway's transformation under Warren Buffett's leadership is a remarkable story of corporate evolution. Originally a struggling textile manufacturing company, Berkshire Hathaway has become a global conglomerate with investments in a wide range of industries. This dramatic shift is a testament to Buffett's investment acumen and his ability to identify undervalued assets with long-term growth potential. Buffett's investment strategy focused on acquiring businesses with strong fundamentals, competent management, and a durable competitive advantage. He shied away from speculative investments and short-term market fluctuations, instead focusing on companies he understood and believed in for the long haul. This patient and disciplined approach, combined with Buffett's keen eye for value, allowed him to build a diversified portfolio of companies that generated substantial cash flow. This cash flow, in turn, fueled further acquisitions and investments, creating a virtuous cycle of growth for Berkshire Hathaway. Berkshire Hathaway's investment portfolio reads like a who's who of American business, featuring iconic brands like Coca-Cola, Apple, and Visa. These strategic acquisitions, made over decades, reflect Buffett's investment philosophy of seeking out companies with strong brand recognition, a loyal customer base, and a history of profitability. Coca-Cola, with its global reach and iconic beverage brand, exemplifies Buffett's preference for businesses with a wide moat or competitive advantage. Apple, a technology giant known for its innovative products and loyal following, represents Buffett's willingness to adapt his investment strategy to changing market dynamics. Visa, a global leader in digital payments, highlights Buffett's understanding of long-term trends and his ability to identify companies well-positioned for future growth. These investments, along with numerous others, have contributed significantly to Berkshire Hathaway's impressive track record of growth and profitability. A key element of Berkshire Hathaway's success lies in its insurance operations, which provide a significant float money that the company holds from premiums before it needs to pay out claims. This float, essentially an interest-free loan, provides Buffett with a substantial pool of capital to invest, further amplifying his returns. Buffett's understanding of the insurance business, particularly his ability to underwrite policies profitably, has been instrumental in generating this float. He views insurance as a critical component of Berkshire Hathaway's overall business model, providing both a steady stream of income and a source of capital for further investments. This strategic use of insurance float gives Berkshire Hathaway a significant advantage over traditional investment firms, allowing it to make larger and more opportunistic investments. The float, combined with Buffett's investment acumen, has been a driving force behind Berkshire Hathaway's long-term success. Beyond his financial achievements, Warren Buffett is renowned for his extraordinary philanthropy. He is a co-founder, along with Bill Gates, of the Giving Pledge, a campaign that encourages the world's wealthiest individuals and families to commit to giving away the majority of their wealth to philanthropic causes. Buffett's own pledge to donate over 99% of his wealth has set a new standard for generosity among the ultra-wealthy. He has already donated tens of billions of dollars to various charitable organizations, focusing on areas such as global health, poverty alleviation, and education. Buffett's philanthropic philosophy emphasizes giving while living, believing that his wealth can have the most significant impact when deployed strategically during his lifetime. His commitment to giving back has inspired countless others to engage in philanthropy, creating a ripple effect of generosity around the world. Despite his immense wealth, Warren Buffett lives a remarkably modest lifestyle. He resides in the same house in Omaha, Nebraska that he purchased in 1958 for $31,500. Buffett prefers practicality over extravagance. His grounded approach reflects his core values and belief in true happiness from passions and making a difference. Buffett's daily routine is simple. He enjoys reading and playing bridge. He maintains a disciplined approach to work and leisure. His unassuming nature endears him to people from all walks of life. Buffett's modest lifestyle contrasts with his wealth, reminding us that true success is about positive impact. Warren Buffett's investment philosophy, often referred to as value investing, centers on identifying undervalued companies with strong fundamentals and holding them for the long term. This patient and disciplined approach, combined with a deep understanding of businesses and their intrinsic worth, has been the cornerstone of his success. Buffett's investment strategy is not about chasing short-term gains or following market trends. It is about conducting thorough research, understanding a company's competitive landscape, and assessing its long-term growth potential. This approach requires patience, discipline, and a willingness to think differently than the crowd. The Buffett way extends beyond finance. It encompasses a set of principles that guide his decision-making in all aspects of life. Integrity, humility, and a commitment to ethical conduct are paramount to his approach, shaping his interactions with business associates, employees, and the wider community. Section 8. Value Investing, a Timeless Approach. Value investing, the bedrock of Warren Buffett's success, remains relevant today. Focused on undervalued companies with strong fundamentals, it offers a disciplined approach, emphasizing research and a long-term perspective. It transcends market fluctuations. Understanding the underlying business provides a solid foundation for informed decisions. Section 9. Long-term vision and patience. Warren Buffett's remarkable success is a testament to the power of long-term vision and patience in investing. He understands that building a successful portfolio takes time, and that short-term market fluctuations are secondary to a company's underlying value and long-term growth potential. This patient approach allows him to ride out market volatility and capitalize on opportunities that arise when others are driven by fear or greed. Buffett's willingness to hold investments for years, even decades, demonstrates his unwavering belief in his analysis and his commitment to a long-term perspective. In a world increasingly focused on instant gratification and short-term results, Buffett's unwavering patience stands as a powerful reminder that true success often requires a long and disciplined approach. His investment philosophy encourages investors to think beyond the next quarter's earnings and focus on the long-term value creation potential of their investments. Section 10. The Power of Integrity. Integrity is not just a personal value for Warren Buffett, but a core principle that permeates his business dealings and investment decisions. He believes that ethical conduct is essential for building trust, fostering long-term relationships, and creating a sustainable and successful business. Throughout his career, Buffett has consistently demonstrated a commitment to transparency, fairness and honesty in his dealings with shareholders, business partners, and the public. He understands that reputation is paramount in business and that ethical conduct is not just the right thing to do, but also the smart thing to do. Buffett's unwavering commitment to integrity has earned him the respect of investors, business leaders, and the general public. His example serves as a beacon for ethical leadership, demonstrating that financial success and ethical conduct are not mutually exclusive, but rather mutually reinforcing. Section 11. An enduring legacy. Warren Buffett's legacy extends far beyond his financial achievements. He is an icon of ethical leadership, a champion of philanthropy, and an inspiration to millions around the world. His investment philosophy, his commitment to giving back, and his down-to-earth approach to life offer valuable lessons for individuals and businesses alike. Buffett's story reminds us that success is not just about accumulating wealth, but about making a positive impact on the world. His life and work challenge us to think differently about investing, about philanthropy, and about the meaning of true success. As future generations navigate the complexities of the 21st century, Buffett's legacy will continue to inspire and guide us. His unwavering commitment to integrity, his patient and disciplined approach to investing, and his belief in the power of giving back provide a roadmap for creating a more prosperous and equitable world.